Hi, this is Courtney Smith. It's late at night. I'm sitting here trading foreign exchange. What can I do? But something is just bugging me. And that is the cavalier attitude that the world has about risk. I sit there and I hear people who I respect a lot, like Warren Buffett, saying that they don't mind risking 50% of their portfolio. Well, I don't know about you, but I can't stomach losing 50%. Maybe if I had $38 billion like Warren, I might be a little sanguine because I'd only have $19 billion left. But the key is that you and I are not in that situation where we can sit back and take that kind of a loss. The thing that we need to do is we need to control the risk in our account at all times. It is paramount. I'm just going to go on a rant here for a few minutes because I can't impress upon you enough that controlling risk is one of the keys to making money in the markets. Using proper risk management can take a losing technique and turn you almost to break even. But if you can live for a long time because you're using good risk management, then hopefully you'll have enough time to figure out what you're doing wrong and correct it. But if you have just a slightly profitable system, then controlling risk is going to make you a far more profitable trader. Let me go into this a little bit more. I have clients that lost 50% of their money in 2000 to 2002 stock market, the bear market and the stock market. They thought that they'd have enough money in their account so that they could retire. But because of that bear market, they ended up losing so much that they're having to work years later. To me, that's terrible. Most investors don't control their risk. So what does that mean? They're out of control. And if they're out of control, then that means they're not investors. That means they're not traders. That means they're gamblers. Gambling is the assumption, is the creation of a risk that does not exist. And that's what people are doing if they don't control the risk in their account. So it's important for us to do that. Those people are gamblers. I've said before, we want to be the casino. We want to know what our risks are and we want to control those risks. Now, let's talk about some of the dangers of losing money because they're very simple. I mentioned before the year that 1990, I was down 35% in the first half of the year, first 6 months. And I'm so proud of myself because the second 6 months of the year, I made 50%. I mean, I traded like a genius, okay? I was so zoned into the market, it was fantastic. But the reality is at the end of the year, in spite of my genius trading in the second half of the year and my completely idiotic trading in the first half of the year, I broke even for the year. Now, I mean, I'm proud of the fact that I broke even, but the fact of the matter is I didn't make a lot of money that year. That year was a complete waste because I didn't have the correct risk management. The fact is that by being down 35% meant that I had to gain 50% in the second half. Now my deal, I had institutional money, about $10 million if I remember. They paid me a salary, I can't remember what it was like 120 grand a year, which was good back in 1990, I'm not complaining. But I got 20% of the profits that I made, and that's what I really wanted to do. Now, imagine how much money I would have made if I didn't lose any money in the first half of the year, but did my genius trading in the second half. That means that $10 million, I would have made $5 million, which for the people that had given me the money, of which I would have been paid $1 million. Instead, I got 120 grand instead of $1.1 million. Risk management, if I had used proper risk management, maybe I would have been down 5% and then I would have made 45% for the year, whatever. But the fact is, that's how important it is. This year, the stock market is down 45%. So people are going to need to double their money in order to break even. Well, if the stock market gains roughly 10% per year, it could take 10 years to double your money. Now, most likely it's going to do better than that, but you don't know. So what if it only takes 5 years? Well, I'm sorry, but if it takes me 5 years to dig myself out of a hole that I made in 1 year, I'm in pretty bad shape. And remember, that's what happened to a lot of people back in 2000 and 2002. In the NASDAQ, that was such a horrendous bear market, 80% or something like that, that when we saw that collapse in the market, that was very, very important. That was something that was just amazing when we saw that. So what we need to do is we need to make sure that we never get ourselves into that kind of a situation, because if we do, we're in deep trouble. Now, not only is losing the money financially debilitating, but it's also psychologically debilitating. And if I combine those two, I'm in deep trouble. So I need to make sure that everything that I do ensures that I'm not going to be into a situation where I'm going to be financially debilitated. Because if I do that, I got some serious problems. So we need to always be making sure that we have a situation where we are in control of the risk in our account. Okay?